Space comes with a premium in Indian metros, and it went a few notches up in Bangalore recently. The country's Silicon Valley yielded the highest rent as a proportion of property value in 2022. It was a staggering 3.9%. Mumbai, which is often cited as the most expensive real estate market, had a rent yield of 3.8%. Come 2023, the rentals in Bangalore exploded to double than at the start of 2022. The increased rentals are being observed across the country. What does this tell us about the Indian economy?
The rental yield for the Indian real estate, residential real estate, has been always on the lower side. There are a few select cities and few select micro markets where the rental yields might be above 3%, but generally it is in the range of 1.5 to 2%, which is actually on the lower side. Now, what we have seen post-pandemic, now to take an example, in Bangalore we have seen the rentals really firming up. What impact it would have on the economy? I don't see a much impact on if the rental goes up, because it's a short-term phenomenon over a long period of time. Once the supply hits the market, we have seen a lot of completion in terms of projects getting completed. So that eventually will come into the rental market as well.
According to Magic Bricks research, year-on-year growth in housing demand in the first quarter of 2023 was 14.2%. The active residential listings also recorded a year-on-year growth of 1.9%. However, on a quarterly basis, the supply fell slightly. This, coupled with increasing demand, shot up rentals in cities such as Bangalore. Experts also pointed out that rentals for residential units took a sharp dip during the lockdown. Landlords are trying to recoup the losses now. That's another reason behind increased rentals. So, will this drive people to consider home buying?
It really depends on the affordability of the buyer. Now, in case of buying, it is determined by the mortgage rates. So, the overall affordability level is what matters, and whether a person moves from buying to renting simply because the rental levels have gone up in the recent past will depend on the kind of gap that remains between the mortgage rates and the rental yields, which, like I said, is high. In short term periods, what does happen is the rental yields also goes up. It takes good 3 to 5 years for a property to be constructed and delivered. But when someone intends to live in, even for rental, it has to be done immediately, and therefore, in temporary periods, there could be a shoot up in rental yields on that account.
An earlier episode of The Morning Show reported that interest rates on the home loans had increased to a bewildering 9 to 9.5%. This was consequent to the RBI's repo rate hike of 250 basis points since May 2022. The recent Monetary Policy Committee decision to pause rate hike may offer some relief. If people move towards buying homes in lieu of increasing rentals, how will increased home loan rates impact them? Let's find out from the industry insiders.
See, the good part, what happened today was that RBI took a pause in terms of increasing repo rate. And, our assessment of the market said that if the home loan remained below 10%, it will have a very limited impact on the buyer sentiment. Now, in that scenario, if we see, we have a lot of the housing market, I would say, is in a very strong foundation. It is not only being bought by investors. Actual end users are buying it, and they have various strong reasons to buy, because right now affordability is all time best. In spite of home loan rates going up, they're still on the lower side compared to what they used to happen during the global financial crisis, or before that, which was into double digit. Interest rate going up, rental shooting up, are all these short-term phenomena. But if you look at the overall trajectory, I think we are on a very strong foundation right now.
Ever since the Indian economy opened up after the pandemic, economists have cautioned that the country is going through a K-shaped recovery. Anurag's research shows that in 2022, affordable housing was the third favored among developers. Its share in all residential launches has steadily declined from 40% in 2018 to only 20% in 2022. In the present scenario of increasing rental yield, let's understand the possible differences in growth between affordable and luxury housing.
So generally, what we've seen is the rental yield is higher in case of lower end of the properties or affordable housing, and generally lower in the higher value of properties, because those are much more expensive. However, when in temporary periods when there is a lot of demand in the rental market, in the mid and higher segments of value, you may see the ability of purchasers influencing a faster growth in rentals. The same cannot be visible when it comes to the segment of affordable housing, where the ability to accept and pay up fast escalating rentals may not exist.
Although rentals across the country have increased sharply, experts believe it's a short-term phenomena. It is being touted as an effect of the COVID-induced lockdown, which halted construction and sales activities. With construction back in full swing and the real estate market stabilizing, a correction in rentals is expected to follow soon.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.